Can you elaborate on the progression of these
where the innings go?
Yeah.
Well,
starting from the first.
Okay, Bitcoin, that was the first. And here's the pitch. It's never tell a trillionaire that they're stupid.
But we need a money system. We do not need a cash system.
I'm not suggesting that we necessarily do. I'm fine with that. I'm just telling you what the title of the Bitcoin white paper was, concerns about CBDCs, which are legitimate ones. I will be disempowered as an individual, and the state will be amplified.
I'm very pleased to welcome back to the show Scott Stornetta. He is the CEO of SureMark Digital. We're going to be talking about the future of digital verification, but also the foundations of blockchain, because Scott is an early adopter of cryptography and an early innovator in cryptography. He is among the most cited authors in the original Bitcoin white paper along with Stuart Haber, and his work in cryptography laid the foundations of blockchain technology that we know today. We're going to be talking about the future of money, the future of blockchain, and the future of AI. Scott, welcome back to the show.
It's a pleasure to be here.
I'm co-hosting with
Bonnie Cheng, and I am curious because you speak Japanese.
I do.
And Satoshi is a Japanese name. I don't know what I'm implying, but...
Well, let me anticipate the question that you're not yet asking. Let me just be clear about, my relationship with Satoshi so that there's no misunderstanding, okay? Watashi wa Satoshi Nakamoto de wa arimasen. Demo Satoshi dattara so no koto o kokuaku suru to omoimasu ka? I don't know how to make it any clearer than that.
I'm not.
We'll put the subtitles in so people can understand that, but I believe you said, I am not Satoshi in Japanese. You were not Satoshi, but you influenced...
What Stuart and I like to say,
yeah,
to take your point about influences, no one seems to know who Satoshi is, but I can tell you, Satoshi knows who we are.
So why do you think the white paper cited your work and Stuart's work?
Well, it cited many people,
yes.
And I don't want to, minimize the contributions of several people. Adam Back, for example, one of my personal favorites, David Chaum, who's actually should get a little more credit, I think. So there's plenty of us that are cited, and I think all it says is there was a ferment at the time and an enthusiasm for trying to make something new that could only be done with cryptographic protocols. So Satoshi cited our work because fundamentally the data integrity structure that Dr. Haber and I invented is really what keeps assets on the blockchain safe. I didn't say free from volatility, okay, but the fundamental mechanism of making essentially all the world a witness to the record, linking the records together, grouping them into blocks, all of that was the groundwork that Stuart and I did. I think that what Satoshi did was a tremendous tour de force, and I wouldn't want to take anything away from that. But in essence, Stuart and I think of him having built Bitcoin on the kind of early blockchain layer that we established.
Well, 30 years after you did your work, which was cited in the white paper, do you think that the original purpose of blockchain, which some argue is to preserve truth with ledger technology, do you think that purpose is still relevant today amongst all this speculation on why people use blockchain and the speculative nature itself of many currencies built on blockchain?
Yeah, I think it's a fair question, and I guess my answer is I think we're going to win in the long haul. We're not there yet because, as you point out, there's this almost ironic conjunction of asserting the truth of the situation, a shared agreed space, and yet it's coupled with what is oftentimes highly speculative activity, okay? Now, I can say for myself that I never envisioned the highly speculative activity, which shows you how unprophetic I am. But I think there's a good thing going on, and that is, yes, there's still quite a bit of speculation that drives a lot of the trading and the holding. But gradually, actual value-creating use cases are creeping into the system. The evolution of stable coins, for example, I think is a terrific example of actual value creation and progress that's being made. The fact that, in spite of the fact that we constantly see headlines about how blockchain or cryptocurrencies are used for scams or frauds, that those actual use cases are really a very small percentage of what's going on the blockchain. It gets more attention, but when you break down the stats, there is a gradual growth towards this creating value and serving a long-run, stable benefit. So I'm hopeful, I guess is what I say. We're not there yet, but I'm hopeful.
Before we go even deeper, for people that are not familiar with your work, what was the most important thing that people should know about your work that was cited in the white paper?
Well, there's actually 4 citations of the 8 footnotes. And so he cited a series of papers that we wrote, as well as an implementation that one of our colleagues did of our work. And the basics are, you might be surprised to see that they existed before the Bitcoin white paper, namely the idea that we would group events into blocks using Merkle trees, the fact that we would link one event to the next, to the next, to the next, so that, and then the fact that collectively the distribution of those records meant that since everyone was watching, no one could cheat. All of those are foundational contributions that Dr. Haber and I made before we get to the Bitcoin stage. What Bitcoin adds, and again, fan of what Satoshi did, okay? He adds a lot, but it's important to understand that he's adding it on top. That's already invented. What he's adding is the incentive structure, the idea to focus strictly on money, and a completely self-contained system for creating the currency as mining rewards, okay, so that everyone is highly incentivized to pay attention to what's going on. That's the kind of 2 layers I would distinguish between what was already established before Satoshi and then the particular genius of what Satoshi added.
When you came up with that, what was the problem you were trying to solve?
Right. We weren't focused on money so much as a broader issue of how do you create an immutable record? And specifically, how do you create an immutable record out of bits that are infinitely fungible? They almost seem like oil and vinegar. And yet, since all records were going digital, we realized that there had to be some way to create reliable records out of easily changeable bits. And so it was the immutable record problem that was our focus.
Before we continue with the video, let's talk about today's sponsor, Delete Me. Now, there's an entire industry built around collecting and selling your personal info. Data brokers collect information such as your name, address, and phone number, then package and sell it to third parties. Delete Me is designed to help reduce that exposure. It only takes a few minutes to set up, and they handle all the work in the background. They identify where your data appears, verify those listings, and submit removal requests to hundreds of broker sites. They also keep monitoring, since these listings can come back over time. I've been using Delete Me for over 2 years now, and they have reviewed over 325 listings of my information. This saved me over 12 hours of searching and reviewing it myself. The reports show exactly what was found and what was removed, which makes the process transparent. Scan the QR code on the screen here or go to joindeleteme.com/DavidLin, link in the description down below, and use code DavidLin for 20% off. Now back to the video.
Was there something that happened to you and you were like, I have to solve this?
I'm afraid so. And the reason I say that is I just confess that I am a little egocentric. And what I mean in this instance is I could see that this problem was coming, and I thought somebody has got to solve this problem before it becomes a huge problem. And then that's where the ego centrism kicks in. It says, I'm the one that's going to have to solve this problem. Like the boy that sticks his finger in the dike or something. So now that you know one of my many faults, we can move on in the interview.
Well, what other industrial applications of immutable technology could be recognized today? Had Bitcoin not invented, basically, your work could be used in what?
Well, I think there is a still untapped benefit of what people would now call hybrid blockchains, where you take private records but register them on the blockchain, so that should the need to disclose those records arrive after the fact, it's easy to show that these are in fact the original records. And so the whole regular course of dealing, recording the existence of records onto the blockchain so that when it's time to audit something or under discovery, everyone can be assured that this really is the original record. I think that's a fundamental use case that is still underappreciated. But having said that, I think it's a little bit provocative what you mentioned. Suppose Satoshi hadn't come along. And I think the answer is eventually a Satoshi would have come along and we'd be, in a sense, where we are today, one way or the other.
Interesting. We don't know who Satoshi is. We just know it's not you, but we do know why, well, we do know what was the design of Bitcoin per the white paper. Why do you think he did some of the things he did? Let's start with the 21 million cap. Why do you think he designed it that way?
Well, again, I think he makes his intention clear on that point. He wanted an inflation-resistant currency. And by limiting the money supply, the complaint against any fiat currency is that a government will eventually be tempted to start printing money to dig itself out of its financial woes, but with the long-term consequence of devaluing the currency, digging the hole deeper, if you will. And so I think that's pretty clear that that's what he wanted. What I think is, again, ironic is the fact that he was trying to create a stable currency, one not subject to inflationary pressures.
What makes you say that? Why stable?
Well, let me be careful in my word choice. He was trying to avoid inflationary pressures, seeing that as the typical instability that needed to be protected against. And yet, coming in through the back end is the whole speculative nature that Bitcoin has taken on, has led to a kind of volatility that, if I had to guess, he hadn't anticipated.
One more question for me. Do you think AI and the advancement of computational power would change the block reward system in a way that if, let's say, it requires less power to produce a block in the future, suppose that were the case, would that not skew the reward system completely for miners?
Okay, so let's take that apart.
Sure.
Okay? The power needed to produce a block is the race to be the first to compute the nonce that allows you to claim longest chain status of the block and therefore be issued some fraction of Bitcoin. That's a self-stabilizing mechanism, namely because there are multiple parties engaged, and if some energy reduction, energy efficiency is achieved somewhere, it becomes available to all the parties that are competing to create that block. And so I think the short answer is, and I would broaden it beyond AI, if more efficient compute mechanisms are discovered, will that destabilize things? And I think the answer is no, because those mechanisms are going to rapidly become broadly available, and therefore whatever temporary advantage one miner gains over another, that advantage is going to rapidly get distributed, and we get back to the equilibrium which is one of the wonderful things about the Bitcoin mechanism. Again, I want to be clear, because many people know that I am not a Bitcoin maximalist. I'm a fan more of the proof of stake side of things than the proof of work, but let's not deny Satoshi the elegance of the self-stabilizing system that he created.
Why do you prefer proof of stake?
Well, I guess for two reasons. Again, let the ego creep forward. Proof of stake is what we essentially proposed in our original papers. Now, it doesn't go under that name, but the idea of randomly selecting from the population based on involvement in the community, so that everyone didn't have to struggle to do the same thing, but that there was a randomizing process for deciding who processed the certification of the next block. That was our assumed starting point. The concern I have with proof of work, and I understand that there are merits on the proof of work side, but if I could just focus on the bigger concern I have, is that it leads to a kind of ever-escalating arms race of energy consumption. And obviously, all other things being equal, that's not necessarily desirable.
But then they can argue that proof of stake makes the rich richer.
Okay, let's take that. It says that the community that has the most invested in maintaining the system has the most influence in maintaining the system. I don't know that that directly translates into a richer. And I should say that one of my personal hobbies is finding ways to bring the income inequality issue more right-sized. So the idea that the rich get richer passively, I am not a fan of, but I don't think that it necessarily follows from proof of stake that leads directly to that.
Could you explain to me why? Because if I have more, let's take Ethereum, for example, and I stake that, I get more yield. So that is what the retail investors understand.
Well, it's not a progressive system as opposed to regressive. It's a proportionate system. It says the stake that you have allows you to vote. It's no different, in my opinion, than the fact that companies that issue stock, okay, the voting on company matters is not one person, one vote. It's one share, one vote. If you own more shares, you have more vote. I think that's fully proportionate. If you want to have more shares, then get more shares. Yeah, I'm still a little from Missouri on that. I don't think proof of stake leads directly to a rich gets richer.
When you and I spoke about 3.5 years ago, when we first met, you had said something along the lines of Bitcoin being the first inning
Yes.
of the game. This was your exact quote. We feel like Bitcoin has been a very positive step forward, but it's in no sense the end game of what people are trying to achieve in creating a frictionless currency. And so we look at Bitcoin as kind of a first inning of the game. Which inning are we in now?
Oh, I'd say at least a third inning, maybe fourth inning. Maybe the rise of stable coins have taken us from the third inning to the fourth inning.
Can you elaborate on the progression of these
where the innings go?
Yeah.
Well,
starting from the first.
Okay, Bitcoin, that was the first. And
Sure.
Here's the pitch. It's a ball, okay? There's been so much innovation, and I can name several, but I don't mean to leave out, those that have been important. Ethereum's quite the innovation by, trying to become a Swiss Army knife and emphasize the importance of smart contracts. The layer 2 protocols sitting on top of Bitcoin are an innovation. Bitcoin itself has evolved modestly, the ordinals and things like that allow for indexing. Okay. And let's say that collectively takes us to the third inning, I would say that the rise of stable coins are what maybe brings us into the fourth inning. And it's not because I'm suggesting that the end game is devolving blockchain-based currencies, having them fall back to fiat currency foundation. But I think it's a terrific intermediate step for those that are looking for more stability.
Let me posit a complete hypothetical that is in my head, okay? The end game, perhaps, may be a future in which we don't need money. Perhaps artificial intelligence will provide the surplus of production and basically control all the means of production such that most people just live without employment, but still in a life of abundance because machines produce everything we need. In that scenario, Bitcoin and all the other currencies fall to zero because we don't need a peer-to-peer system anymore. Is that the end game?
Okay, let me try to get some wiggle room here.
Okay.
And say no, that is
Okay.
absolutely not the end game.
Okay.
Okay, and again, I mean no offense
Sure.
to some of the ideas you put out, but right, isn't what creates value here in our discussions the
Sure.
fact that we brainstorm and that we push back and forth on different ideas?
I believe this was also the plot for Star Trek, but anyway, I'll let you.
It could be. It could be. Let's talk about abundance.
Sure.
Okay, and then we can talk about AI and,
Sure.
and so forth. If someone living in 1700 were to be transported to here today, they would see a world of unimaginable abundance. Okay? And yet we still use money just like they did in 1700. And why is that? Well, I think it's for a couple of reasons. One, abundance is relative. And I hate to always draw on my friend Adam Smith, but Adam Smith observed a long time ago, 250 years ago this year, that there is an insatiable appetite among people for more of something. Okay? And so the idea that we will all have enough, that we will stop worrying about money and stop worrying about work, I think, quite frankly, goes right against the grain of human nature. The second thing I'd say is that, and again, I'm all for abundance, and I feel that in my own small way, I'm actively working towards, a better value for the Gini coefficient. But we have 100 times the goods and services today, the GDP, if you will, compared to what we had a couple of hundred years ago, okay? And yet for people living today, they say, well, I'm not starving, but is this really abundance? And they say, I don't know, I've kind of gotten used to this level, and abundance, I can imagine, abundance is what people that make more money than I do have, right? Yeah. Never what I have. So I very much believe that there will absolutely, in no matter how positive a scenario of growth, and even if the growth is well distributed, okay, that there will still be a need for a currency, a way of exchanging value in a low friction way. Now, let's go to the not work scenario, if I could take a part of it.
Yeah.
And the whole universal basic income concept, for example. I think, again, and I know I'm only taking part of your thesis, so I'm not suggesting I'm debunking it by pointing something out. This idea that all the jobs will go away because the AI can do everything. Again, I think there are fundamentals of economics, both economic theory as well as economic history, that argue against it. Namely, if AI is really adding value, then that means GDP increases. There's more value creation, right? That means people have more disposable income. And what do people with increased disposable income do? Well, they want to find something to buy using it, okay? That leads to almost axiomatically to new job creation. I think that's just unavoidable. And I think the reason that people think jobs will go away is more that they look at the existing jobs and they go down the list and think of all the things that can be eliminated by AI. And they say, well, all of those jobs will go away. But they're not picking up the full import about how job creation works, which is that new jobs get created. New supposed needs emerge. Again, more on the half-joking side, there's a couplet that I'm very fond of that says, there, little luxury, don't you cry. You'll be a necessity by and by. And so, no, I think we're going to have jobs. You know what the most dominant single job category was in the 1920s in the United States?
Was it
Farming? I don't
farming?
know.
It would go back earlier and definitely become farming at some point, but not in the 1920s.
1920s.
Factory?
It's a single job title.
Don't know.
Telephone operator, switchboard operator.
Really?
There were more people employed as switchboard operators in the 1920s than any other position. Now,
Wow.
how many switchboard operators do we have now? Essentially zero. And so what happened to those switchboard operators? Well, their jobs went away, but their employment did not go away.
Allow me to push back and I'll pass it to Bonnie. Sure. Jobs disappeared and then they reemerged as other jobs in an era where technology did not provide not a competitive advantage, but an absolute advantage over all human labor. So comparatively speaking, at the time, telephone operators existed because there was no machine that could do it better. In the future, the theory is that machines will have absolute advantage over human labor, such that there is nothing that humans can do that a machine cannot do better and more efficiently, in which case the telephone operator in this example can't go to another job because there will be no other job in which he can outcompete a computer.
Yeah, I do want to respond to that.
Okay.
Let's be clear that there are scenarios of comparative advantage in which, let's go back to a classical setting, one country does everything better than another country, okay? And yet we know from Ricardo and others that it is still advantageous for those two countries to chain, for those two countries to trade, because being dominant in every category does not repudiate comparative advantage and the fact that we can still re-optimize, okay? So I do want to push back there.
Sure.
But I also think that the framing is not quite right. Okay. Namely, I use AI a lot, okay? But I use it to enhance my personal productivity. It doesn't eliminate the need for me, okay? It makes me more capable of carrying out the things that I want to work on. And I don't think the argument necessarily follows that, therefore, let me restate it, let me back up, okay? I think it is a much more credible incremental projection to say that those that learn to use AI tools will become more and more productive. And there's no reason that everyone can't become more and more productive as everyone uses AI tools.
What you just said has to base on every country, they're open and they allow free trade.
Well, that's a good idea.
But
Those
that
countries,
is not the
countries
case.
that elect to not do that, they suffer self-inflicted wounds.
So you think in the future, free trade, completely free trade is
Well,
going to happen?
Okay, that's sort of like Fukuyama, the end of history prognostications. What I'm saying is trade is a very good driver. Okay, if you think Bitcoin mining has strong incentives, trade has very strong incentives, and so I wouldn't ever count it out.
If we all go to Mars tomorrow and you are responsible to invent the perfect monetary system, what would it look like?
Well, you don't have to go to Mars to do it. The reason I mention it is, first of all, I'm not a real fan of going to Mars, but that's a different debate between one soon-to-be trillionaire and one, let's call him less than a trillionaire, namely me. Mars allows us to think about a fresh start. If we could just start from scratch all over again, what would be the right way to do it? And I would answer that the right answers are answers that we don't even need a fresh start for them to emerge. In other words, the right answers are powerful enough that they can be birthed here in our fallen world and gradually gain traction. They don't need all the competition to be wiped clean and have a level playing field. The right answers are powerful. And so I think those right answers that if you would like to see them emerge on Mars, be my guest, that's free trade, okay? But I think they can emerge right here and now and show themselves able to dominate over existing ways of managing money simply on their merits.
What are these right answers?
Well, again, don't know everything. What is it? I am not a economist. But I think there's a very tempting opportunity for money to get grounded in something that is universally measurable and tradable and agreeable on, a kind of new functional goal.
Which is?
And I would like to suggest that it would be the kilowatt hour. In other words, a kind of options and futures market on energy to be delivered at a given location at a given time. I think the kilowatt hour provides a very nice, gradually deflationary currency that is universally applicable and actually can run on pretty decent rails, and that I think could provide direct inherent utility rather than substitutionary utility.
Would you not just inflate that to zero if everyone starts producing power?
We could use as much of it as we can.
That's a good point.
We find lots and lots of uses, but it will be a gradually deflationary one.
Okay.
But I would love to see trading in the kilowatt hour as the universal unit of currency. And in fact, I'd love it so much that if someone else wants to work with me on this, and a couple of other people that I've talked to about it, please reach out to me and let's see what we can do.
I'll put the email down below.
Jensen Huang, NVIDIA CEO, he actually said Bitcoin converts surplus energy into transferable economic asset.
That's right.
But, so why not Bitcoin? Why this new thing?
Well, first of all, never tell a trillionaire that they're stupid, or a soon-to-be potential trillionaire. It's a smart point, and it is true today. It may not be the most politically admirable one, but there was a point in time where many years ago, not too many, a few years ago, where Iran, because it had trouble exporting oil, decided to just burn the oil and use it to mine Bitcoin. And that's a realization of the very thing that Jensen Huang is saying. So that's kind of a good thing. It's sort of energy as a battery, money as battery. Okay? And nothing wrong with that. I think that's an interesting observation, and it's making use of an efficiency. I think the kilowatt hour would simply take it even further.
Is that what you would change if you could go back to the Bitcoin time, what would you change about Bitcoin?
Oh, my changes would be more modest than that. The kilowatt hour is kind of my asymptotic project. I think it goes back to the statement I made earlier. I think a proof of stake system could have been initiated from the start that still could be to good effect. Now, of course, it's easy to second guess, okay? So let me come back and, we come to praise Satoshi, not to bury him. He got something right. He very much got something right. And he got the ball over the goal line. If he had done it a little differently, would it have been as successful? We can only speculate. What we know is that we got a win, and he got that win. So yeah, I don't know that I needed to change something right at the beginning. I like a lot of the innovations that we've listed.
So what you're saying is proof of stake Bitcoin, if that were to happen, somebody would have to issue a lot of tokens. There will have to be a founder to issue a lot of tokens, like what Ethereum did in early days.
Okay.
And a lot of people would get into this new Bitcoin early.
You don't have to artificially issue tokens. You can start it in the same natural way that Bitcoin started.
Explain to me how.
Well, how do new tokens get created in Bitcoin? From mining, okay? But mining is really just a contest to see who gets the next,
Right.
okay, the next block credit. You can play that game without proof of work. You can play that game in a proof of stake world.
Could you explain how it works?
Well, one, rather than try to do it, perfectly right from the beginning, think about one of the ways that proof of stake can decrease the activity of proof of work without entirely eliminating it. Namely, proof of stake, from my perspective, is fundamentally saying, look, let's not all fight at once, okay? We can choose a subset of the population to fight it out for this round, and the next round we'll choose a different subset of the population to fight it out. In that way, you can reduce the energy needs. You can still play proof of work, energy proof of work, but within that subset, and then move to a different subset, and then move to a different subset. That leads to lower energy consumption, but the same basic mechanism for mining creation. It's just an efficiency that can be gained. Satoshi went with everybody is in the contest every time, okay? And proof of stake really is a way of saying, well, let's play divisional playoffs. Let's not make every game the World Series.
But isn't that the value of Bitcoin, is the energy that is backing the value? Or
Well, it's interesting because the instantaneous energy expended increases the odds that those that have more instantaneous energy, the rich, are getting richer, just to kind of turn things around. But it's also the base compute that is available to mine. And so that's not just the instantaneous energies supplied, it's the capital infrastructure that's been built up. That also is a rich getting richer situation. So, yeah, I don't view it as black and white there. You can build gradations into that, as I've tried to illustrate one example of a gradation. You definitely want people to be incentivized to obtain additional tokens, okay? And to the extent that you can align that with maintaining a system that allows for low friction interaction, all to the good. So there's a lot of ways to skin a cat. What I don't want to creep into is, oh, well, if I had been there at the time, I could have done better than Satoshi, because I think that's a tough hurdle to surmount. He did something very, very valuable, and that is he got the game going.
You did say Bitcoin is actually too transparent to be the true digital cash.
Okay, now you're quoting from something I've said previously.
With David?
Yes, and that's to take on an important point, but maybe a finer point. What was the title of the white paper? Bitcoin, a peer-to-peer electronic cash system. It wasn't Bitcoin, a peer-to-peer electronic money system. And obviously cash is a subset of money, but more restrictive. Cash allows for completely anonymous transactions. Okay? Bitcoin is really just a ledger that records every transaction. And so ultimately there is no anonymity in Bitcoin. Okay? There's a pseudonymous component because your, let's call it, physical world identity is not in a transparent way bound to your key pair. Okay? But the instant you cash in from the Bitcoin world out to the physical world, I don't necessarily even want to call it the real world, because which one is more real? You are disclosing identity. And so it's not a cash system. It's a money system, but it's a money system that is supported by a ledger, which immediately means that the true anonymity of cash is something that was given up on day one by making a ledger that everyone can view.
But we need a money system. We do not need a cash system.
I'm not suggesting that we necessarily do. I'm fine with that. I'm just telling you what the title of the Bitcoin white paper was and what it is that he was striving to do. And I think you have to make a concession that cash is not what has been achieved here. Even the most pro-Bitcoin maximalist would have to concede that there's a ledger there that tracks everything. And so it's not cash. And then the question becomes, if I could take up the thread of where I was in the David Lynn conversation, is it a money system? Okay. And economists, I'm not an economist, but I play one at the dinner table to my family's chagrin. Economists say that money is three things, right? A medium of exchange, unit of account, and a store of value. Okay? And the medium of exchange being the most important of the three, I think most economists would argue. Bitcoin is a medium of exchange in some settings where Bitcoin's volatility is less than the volatility of, again, not to pick on any particular country, but something like Zimbabwe and hyperinflationary currency or something. So it is used as a unit of exchange, as a medium of exchange in some of those settings, but obviously in so-called developed or OECD countries, it's less used as a medium of exchange, almost vanishingly. Okay? Now, is it a unit of account? And finally, is it a store of value? Well, I know of very few contracts that are written in where Bitcoin serves as a unit of account. Okay? And to go to the store of value, there it's even more ironic in the sense that what most people that are purchasing Bitcoin are doing is they hope it's a store of appreciating value. Okay? That's different than what money is.
appreciating value in a world where everything can be printed. So relative, this is more valuable than money that can be printed.
No, I'm saying tagging the Bitcoin that I purchased today against the Bitcoin that I can sell tomorrow. They are betting that
That is
Bitcoin will
denominating
appreciate
in USD.
as an asset. Oh, I see what you're saying. Okay, sure. I'm happy to grant
Maybe
that.
that is what people think of when they say store of value, is because if I hold USD, which is already the strongest currency, then my purchasing power will go down. But if there's this alternative store of value, the value is still, we're still denominating in
Okay,
USD.
I'll take your point, but let me offer a rejoinder.
Okay.
Store of value, if you dig down a little bit further, let's leave the dollars versus the Bitcoin out. Store of value is inferring store of stable value. Okay. Now let's leave the dollars out. Bitcoin and basket of goods. Okay. Store of value means that even at the basket of goods level, that if I store this currency, that a year from now, I'll still be able to purchase effectively something close to that same basket of goods, okay? That is not the thesis of people that are purchasing Bitcoin.
Yes.
Their thesis is, I'll be able to buy more of that basket of goods. And I've been able to have a discussion without reference to any fiat currency. And so Bitcoin is still a largely speculative, for the major players, is a bet that the value will go up.
A really quick picture here. It says Bitcoin purchasing power 2016. It takes 664 Bitcoin to buy a house in US, and 2024 it takes 6. This is what is happening. That is why people believe.
Yeah, they are speculating that the price will go up. That's not what store of value means. That's hope of increasing value. It's not a negative concept. That's why people invest in things. I'm not saying it's a bad thing. I'm saying it's different from the purpose of money as store of value.
I have one more money question, then I'd like to talk about digital identity and AI. Do we need central bank digital currencies? From a societal point of view, in the sense that if something were to be introduced, everyone would be better off. Does the CBDC do that for us?
I don't think it follows necessarily.
Okay.
Okay. I'd almost want to unpack it. I know that you've specifically spoken about CBDC.
Sure.
Okay. Right now we have CBC, central bank currencies.
Yeah.
Okay. So let's first ask ourselves that question. Yeah. Do we need central bank currencies? In a fundamental sense, no. We can function without central bank currencies. Have they proven useful? In many situations, particularly those, the British pound comes to mind historically, the US dollar more recently historically, over the last 100 years or so, I'd say has done a reasonable job of keeping money somewhat stable and allowing money to fulfill its purposes. Obviously, there's always the temptation to print money. And when you're a fiat currency, meaning I just decide, then you have that temptation. And we've seen many instances of countries where they indulged. Okay. So do we need CBC? Not necessarily. It's certainly in many cases proven useful. Now, do we need CBDC? Well, I think the biggest concern that people express is that suddenly everything can be tracked by some centralized entity. I have different feelings about that. I think that question is often broken down in the wrong way, and doesn't recognize how much of the anxiety we have about it is not so much the disclosing of information per se, but the asymmetric accumulation of power of one entity knowing lots about lots of people and the individual people not being in as favored a position. So if you were to ask me, is a CBDC that means the government can know everything about me, but I don't know reciprocally everything about the government, is that a good thing? No, probably not. But it's due to the asymmetry of information. It's not that the information disclosure is inherently bad. It's that it's asymmetrically held.
Let's say I'm in power and I do not like what David said about me. When freeze his account,
Right.
take all his CBDCs,
And
I think that's what people is
That's
scared.
the CBDC
Yeah.
concern. But let me give you a different
Okay.
fantasy scenario. Okay, let's imagine that David and Bonnie and Scott, okay, are themselves individually nation states.
Oh.
And you have your currency issued by your CBDC, and you have yours, and I have mine. Okay, what's the downside of the fact
we
that
can't trade?
well, as long as we find ways to interoperate, we trade today between people with euros and dollars. Why,
Okay.
My point is, I think we're viewing the concerns about CBDCs, which are legitimate ones, through a lens of I will be disempowered as an individual and the state will be amplified as a centralizing institution. And I don't want that. But that's not inherent in CBDC. It's inherent in the concentration of the CBDC's information. If we were all independent and sovereign nation states, and we all had our own CBDCs, no one would complain about the fact that anyone that uses my CBDC, I know everything about their transactions. Because to trade with you, I'm going to also have to use yours, and then you're going to know everything about. As long as there's a kind of parity, I think information loses its fang.
Can I bring something up? So, okay, a couple years ago, there is this project called Friendtech. It's been a while. Friendtech. So what happens is you can go on this project and issue your own stocks or tokens. Now, the problem with this project, and it failed completely, is because Scott would be trading at a lot higher than, for example, Bonnie. And people are just buying and trading these so-called stock or tokens of these celebrities or any person. And eventually, it's like a game theory that ends badly.
Yeah. Again, those sorts of schemes have been proposed before. It's not unlike what's going on with NFTs or any sort of meme coin.
But is that what...
That doesn't mean, okay, that the concept of information parity is a flawed one. It simply means that that was, kind of a celebrity promotional scam, if you
But
will.
what would-
It didn't create value, and it didn't, reduce the friction of trade. So what did it do except, kind of promote?
Are you suggesting that everybody's CBDC has to be equally valued?
Yeah, no. You have to understand, and I apologize because of the way I was brought up. I was trained in theoretical physics, okay? And physicists think in sort of asymptotic terms, meaning what would it be like if, just to imagine scenarios and kind of play with the things. Okay? I'm not suggesting that the right way to solve all the world's problems today is for everyone to issue a currency. Okay? What I'm saying is, let's do let's play a thought experiment, a so-called Gedanken experiment, and ask ourselves what kind of a world we'd have if thus and such. And I'm saying it really just to promote the ability to discern the difference between the asymmetry of information and the availability of the information, and point out that some of our anxieties about certain things are tied more to the asymmetry of the information than the actual information. The actual information is not the enemy. The asymmetric power imbalance is the enemy. So I'm just trying to tease apart those two thoughts.
Going back to AI, what is the immediate danger that AI poses to our society today that we need to address, that you as a scientist want to address?
Okay. Let me just put in a almost useless historical footnote to begin with, which is my actual dissertation from Stanford, even though it was in the physics department, it was in fact the first neural networks dissertation that Stanford approved. And so in that sense, I've been thinking about AI for a long time. Okay. What I don't want people to think is that I did something useful in my dissertation. It was a very modest contribution, sort of historical accident. But I've been thinking about AI for a long time, just didn't make much contribution. If you doubt it, go back and read my dissertation. So using that as a starting point, meaning not a meaningful contributor, but someone that's been following it for a long time, let me first say that I am very much a cup is half full person on AI. Way more than half full. Let's call it 95% full and 5% problems that it's creating as we adjust to its benefits. Okay. So now if we take the question, what kinds of problems does AI create? I'd say yes, there are some. In the midst of all the good that it's doing, both in the near term and the long term, there are some problem areas. And the one I'd probably draw immediate attention to is deepfakes, AI-generated deepfakes. Okay? The growing fidelity of AI imitations that make seeing no longer believing. Okay. Inability to distinguish the synthetic from the natural or the real. I think that's an adjustment problem. Can it be addressed? Well, it's funny that you should ask, because that's obviously what my current company, SureMark, works on, that I'm doing along with Dr. Haber, who I did the original blockchain work with. And the analogy I'd offer is, again, historically, think about airplanes and aviation. You know, when airplanes started out, there's no cockpit, there's no instruments. You know, you go off the ground, you look around, you find a safe place to land, and you land. But as the capabilities of airplanes grew, we wanted to fly higher and faster. We wanted to fly in stormy weather. Okay? So what did that dictate a need for? It dictated a need for instrument-based flying. Why? Because you get disoriented when you're up in the clouds or in the storm. And the natural instincts, in this case of your vestibular system, give you the wrong information. They tell you you're upside down when you're not upside down. And so they no longer are reliable. And so you have to fly by instrument. I think there's a very similar thing going on here. Seeing is no longer believing. Hearing is no longer believing. Okay? There's a lot of stormy weather ahead. But the solution is not to say, well, it's hopeless. The solution is to say, we need to learn to fly by instruments. Okay? And what we think is the winning hypothesis is that instrument-based flying is a positive assertion of identity rather than detection of deepfake. And so that's what a SureMark credential is designed for, a way to bind identity to the person in question in a way that can't be forged and can't be faked, and where we can positively assert it is me that you're talking to, and not someone else, we think will prove, just like instrument flying over visual, the valuable and necessary progression in navigating the AI deepfake world.
Could you use a very easy example for people to understand why is it important that I need to know I'm talking to you? Not your clone, not your AI agent, but you.
Well, again, to me, the most vivid example that happened a little over 12 months ago, I guess, was with a company called Arup Limited, a UK-based company that had extensive dealings in Hong Kong. And the senior officers of Arup got together on a Zoom call and made decisions about where funds should be transferred and so on and so forth. Except all of the people on the call were fakes, except the victim. The victim thought he was interacting with the senior management, the officers of the corporation, whatever, and was following their instructions for wire transfers. But it was all, it was all synthetic, okay? That's where it would be useful to be able to say at the start of such a meeting, okay, let's make sure that we all are who we say we are. Let's perform the necessary process of questioning and then proving identity, and then let's get on with our meeting. And that's in fact just what a SureMark credential allows.
I see a scenario in the not too distant future when somebody could reach out to you over Zoom and say, I'm David Lin, let's do an interview, fake an email using a domain that's similar to mine, and then say, hey, I got a new website, let's do an interview, and it'll look exactly like me. The voice will probably sound like me too. Like how do I as a media personality, or Bonnie, anybody else in the space, how do we fight against that?
You simply get a SureMark credential. It doesn't cost that much.
Okay, back to this and the meeting example. What would the process look like?
I pull out my smartphone.
Okay.
I look you up in a universal registry. I press a button that challenges the software on your smartphone to respond to in a way that proves that you really are that credential holder, and only you, in a way that only you can respond. And then I know it's you. And then we move on.
Okay, can I give an example? So in Taiwan, we have this system where if I go to a bank and I want to withdraw money, I have to prove that I am me by being there and also bringing a stamp, like an actual stamp. If I go there without the stamp, I'm not me anymore. Mm-hmm. In this case, if I don't have that smartphone, I am not me anymore. So it's a smartphone that has a KYC of me.
Well,
that's me.
It's simply a credential that lives on your smartphone.
So what if I don't have my smartphone? Then I'm not the
Well, you don't cease to be you, but you don't have a very effective Zoom meeting because no one wants to talk to you if they're not sure it's
That
you.
is terrible.
Oh, I don't think it's a problem at all. We can still meet face to face. What this allows us to do is meet virtually with the same confidence that we have face to face. I think it's a step forward. Go back to the airplane example. You can still fly when it's a clear day at low speeds, there's no clouds, and you can just fly visually. That's what face-to-face meetings are, okay? But would you also like to fly above the clouds, through storms, gain the additional power of flying fast and far? Well, then you're going to need instruments. You're going to need a credential.
My final closing thought, and then I'll pass it to Bonnie if she has any more questions. In the future, if machines start to run companies, they're already starting to do that, but if they're starting to do that more, they'll probably have to find a means to do B2B business, in which case they'll have to have a currency with which to do that business. What currency could that be? Would they use something that exists already, or would they create their own? Let's just speculate here.
Well, I think you've just implied the answer. You're saying companies are starting to do this now. These companies are starting to, well, what are they doing business in? Probably dollars. Now, a different question, maybe the one that you're prompting is, will there emerge a more efficient thing for them to B2B intercommunicate?
Yes.
Absolutely. Okay? more efficient things always emerge when there's incentives to create them. And as to what the nature of that would be, well, obviously, it would be kilowatt hours.
Okay. All right. Excellent.
What is the most fun problems you've been solving recently?
Again, seeing is no longer believing. Hearing is no longer believing. How do we solve that? And I'm very excited about what we have. Frankly, and I know there's a little ego again creeping in here, I think the credential-based identity will someday have a level of impact equivalent to blockchain-based record keeping.
Can we elaborate a little bit? WorldCoin, they KYC you by scanning your eye. But what happens is a lot of people go to poor villages and try to scan people's eye to collect more identity. How do you stop that?
Well, we can't solve all the world's problems at once. I would let the world people, the Tools for Humanity people solve that. I've met some of them. I think they've got a very inspired mission. And, I think it's interesting what they're doing. I would point out that their approach is proof of human,
Right.
okay, without disclosing individual information. We're working in a very different part of the space. It is proof of this particular human.
The vision, if I understand correctly, is that if everybody has a verified wallet that is verified by scanning your eyes, now if governments or whoever wants to issue, let's say, bonus or whatever, money
UBI.
to UBI, yes, then they can just send it directly. That's a concept, but that involves CBDC and all that. It's like a much larger scale.
It makes a lot of assumptions and probably isn't something that we could discuss at a reasonable level at the end of an interview.
Excellent.
We have 7 minutes.
Excellent. I think this is a good time to wrap it up and
That was great.
prompt the audience to follow us for Scott's return next time.
Oh, yes.
Hopefully with another panelist. We won't reveal who, but if we make it work, it should be a
Could
very
I just
exciting.
add one more thing?
Yes.
What I hope the audience can do when this video is available
Oh, yes.
is that they will be able to install a piece of free software that will allow anyone in the audience to confirm that it was actually Bonnie and David and Scott that were on this video.
How do we do that?
Yeah, how do we do that?
Let's post the video and then we'll execute that and we can add a footnote to explain how people can see that.
Exciting. Okay, let's do it. Thank you very much, Scott. Appreciate your time today.
All right, it was a
Thank you.
pleasure.
Thank you.
Thank you for watching. Don't forget to like, subscribe to both of our channels, and follow Scott.